Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is April 25th, and Brent crude oil is trading essentially little changed. For those it's all sixes on the boards at the moment, 6666, at essentially up 10 cents on the day, but essentially all sixes across the board there as Brent closes out the week with a weekly loss. Let's kick off with Bill Spindle, Senior Global Correspondent at Cipher News. Cipher, I have to say, I'm not quite sure what the correct pronunciation is. I suppose it depends what your accent is, but nonetheless, Cipher News. Bill, sitting in the US, while you get to kick off today, what's happening with Trump's tariff war engagement world? Is it losing steam? Is it sort of falling away to the sort of dregs of lax credibility? Where is the US government and hence all of its kind of cheerleaders at the moment in the middle of this 90-day pause? Have we run out of steam? That's where they're at. They're silenced because they're muted. They won't speak up.
I think you got to look at both We're on.
Yes.
I think you got to look at both the China side and the non-China side of this. I think, on the China side, which is really the most, short term, the biggest concern that everyone's got. Clearly, everybody's on both sides is looking for some sort of on-ramp. Everybody knows this can't go on forever. But finding that on-ramp or that off-ramp is not that easy. And then on the other side, with the rest of the world, it's really a question of what sorts of deals can you possibly reach within a...
But I suppose the key here is, and that's why I'm asking you the sort of U.S. perspective, is that nobody's moving Xi Jinping from a popular pressure point of view. There's nobody getting out on the streets demanding that he does a dance this way or the other. The question we have out in the outer realms of the Roman Empire is who's putting pressure? How much pressure is on Emperor Donald by all of the constituent stakeholders in Washington and Wall Street to get his act together and get on with this? Or is there any?
Well, yeah, there's definitely pressure. I mean, there's... they had meetings with the heads of a lot of the major retailers, for example, recently, who told him, okay, within weeks, you're going to start to see empty shelves. And the bond market is pretty queasy about all of this. So there's definitely pressure. It's really a question of finding some sort of an off ramp that allows, both sides to pretend that they're making progress on this. Which will then ease things up, and it can go from there. You're going to see a significant drop in the level of tariffs, but they're not going to go away. That's what they've said. I don't think anybody expects them to. And then again, on the non-China side of things, it's really more of a kind of logistics issue of how many even kind of shallow sorts of trade deals could you cut within a weeks long to very few months long period.
Rosemary Griffin, OPEC Plus lead reporter at S&P Global Commodity Insights. Rosemary, does the oil market care more about what Bill's talking about there, or is it more focused on the OPEC Plus news, the OPEC Plus output supply decisions that are coming, that have already been announced?
I think to choose one or the other is pretty difficult at this point in time. And I think that what happens in the US will definitely feed into those OPEC Plus decisions. And there were some reports earlier this week that they are, planning on accelerating the output increases in June. That's not what I've been hearing from delegates. One has told us that they cannot support a decision that will accelerate a deterioration of the market. And others are saying that they're waiting to see how market dynamics develop. And I have some sympathy with people who are waiting to see how market dynamics develop given the last few months.
The news, the mood music out of OPEC Plus is for a continuation, that there does seem to be some duress within the group, and so those who are behaving want to put a big squeeze on those who aren't behaving. Does that seem to be the narrative? Is that continuing to be the strategy?
Yes, I think there are two schools of thought, really. One is that these overproducers, primarily Kazakhstan and Iraq, have not really managed to meet their targets pretty much, well, for months. And there is definitely frustration with that among members who are complying. The other element to this, I think, is the potential of harsher sanctions on Iran. And that is definitely in the background. And, their demand forecast could potentially be factoring in, a cut of, 500,000 barrels a day from Iranian output. So I think it reflects the uncertainty. I mean, they definitely are in a tricky situation, given that they have obviously lost a lot of market share over the last few years. And whether this is kind of a shift towards trying to claw some of that back is a good question. But we have the next meeting of the voluntary production cutters is going to be on May 5th. So over the next week or so, we should have a bit more clarity on what they'll decide to do in June and further out into the year.
Mohammed El-Jar, co-founder Libya Outlook for Research and Consulting. Mohammed, sitting in Libya there, the big question for OPEC Plus, of course, is not only their increased supply or their supply discipline, Libya a member of OPEC, but outside of the OPEC Plus agreement. It's all of those countries that are outside, like Libya, like Guyana, and others, who outside the agreement, who have no restrictions on new supply. What's the outlook for Libya to add to its current production levels and sort of challenge the market further to take in more barrels?
Indeed, Libya is exempt from the cuts, or has the margin to increase its production. But I don't think there is any immediate significant increase out of Libya, and Libya continues to be somewhat on the down risk side as far as oil production is concerned in the country. However, a significant development in Libya this year is the announcement of a new bid round in Libya, where Libya's National Oil Corporation is expected to sign agreements in November of this year for 22 concessions, both offshore and onshore. But Libya continues, obviously, to suffer from lots of legal challenges, political challenges. The institutional instability in the country always continues to kind of shadow any positive development as far as Libya's production is concerned.
And who are the big players these days in that geopolitical? I mean, it's hard to imagine that anybody in Europe or America has the bandwidth to think about China right now, or thinking a lot about China, but thinking about Libya. Who are the external forces that are influencing the direction of travel within Libya, and so the outcomes of some of these decisions?
So I think it's the new bid round, or who wins, is going to be quite interesting to watch in Libya. It looks like we will be witnessing newcomers in Libya, more regional ones rather than the European or American giants. So Turkey, the United Arab Emirates, Egypt, Algeria also seems to be kind of extremely interested in, if you like, getting more involved in Libya, but also they seem to be more able to handle the political uncertainty in Libya, the institutional uncertainty that exists in Libya. They do have lots of political diplomatic investment in the country that should enable these national, if you like, NOCs to be able to take the risk and also take a bigger share of Libya's new bid round, or Libya's potential future increases in production. However, a giant like Eni, for example, and Total, who continue to increase their production and their, if you like, their investments in Libya, are expected to still still be there, but whether they will be able to secure this time around, if you like, enough licenses or a share of the licenses that the NOC is sharing remains to be seen.
Bill, as we come to the sort of end of the first 100 days of Trump 2.0, inevitably there's surprises everywhere, perhaps within the context of one is oil prices are down 20% since he took office. Oil production in the US, at least the outlook appears to be the opposite of drill, baby, drill. It's shut up your drilling as soon as possible. So if that is the case, is there a better outlook for the energy transition, for the Inflation Reduction Act and all of its gifts that it was offering? That are we starting to see maybe some of the runway, like how things are going to actually play out now after 100 days?
I think you're going to start to see some of that coming up in the next 4 to 6 weeks as they get through this tax deal that they're trying to figure out, because that plays a big role in it.
Tax deal being this renewal of Donald Trump's first administration's tax cuts.
Right. They've got to sort most of that out over the next 4 to 6 weeks, and a lot of the tax, the ability to extend those tax cuts, that money needs to come from someplace, and a lot of people want it to come from a lot of the IRA provisions, even people who like some of those IRA provisions among the Republican Party. So it's, they're going to have to make really tough choices about that. So that kind of uncertainty, I think, is going to continue for, really the foreseeable future.
And given the sort of idea there that there needs to be tax, there needs to be revenue somehow reduced, obviously the balance sheet, so to speak, in order to have a runway towards further tax cuts, i.e. reducing government revenue. Does that the political climate for that? It seems that the US is well used to running very generous fiscal deficits now. How much does Trump need cover to get these tax cuts through?
Yeah, I think that's the big question, is to what extent can they really keep pushing the revenue and the fiscal situation to the point where the bond market, starts to really react to it. And that's what they're going to head into. You've seen these, this big effort by Elon Musk and his Doge budget cutting, which hasn't really yielded really all that much, very little, on the scale that would make a difference to the debt and deficit situation. So it's really going to be a day by day, very unclear situation for, like I say, the foreseeable future.
The foreseeable future is not going to deliver drill, baby, drill. That's probably one of the only certainties at the moment. Rosemary, looking at that dissension within OPEC plus, Iraq on the naughty list, and Kazakhstan most notably, is there any indications there that they're going to come into line? Is there any indication there that Kazakhstan could follow Angola and Qatar and others who have left this OPEC plus group? Where do you think this resolves itself?
I think that for Kazakhstan, its main problem, and this really contrasts to some of the other producers, is that the bulk of its output is controlled by foreign companies, and they do not seem to have succeeded in any way in encouraging those companies to cut production in line with what the government's committed to. We did hear Eni say yesterday that they've had no talks with authorities in Kazakhstan on cutting production. And some officials there have said that they can, to some extent, cut more at production sites owned by Kazmunagas, its state oil producer. But that's really a lot less of its overall production. So the degree to which it could use those cuts to make a meaningful cut is pretty unclear. We had a lot of mixed messages from Kazakhstan this week. They insisted that they share market stability goals with the rest of the group. But then we also had the energy minister saying that national interests are coming above the OPEC plus obligations. And one interesting thing, yesterday I was talking to an aide to the Kazakh president, and he told me that they think that oil prices are quite balanced.
at these current levels. But
At current
where does
levels.
that leave the duress within the group, or is that being oversold as the reason why OPEC Plus have decided to increase supply into this sort of weaker demand window? Are there other reasons why OPEC Plus, decision due in the next week or so for June, that they will continue to increase supply? It must be for other reasons than simply unhappy with Kazakhstan.
I don't think it's been overplayed. It's definitely probably the main consistent factor that we've heard, and not just this year, for a long time, that this has been a big issue for the group. But as I said previously, I think, the prospect of some Iranian barrels leaving the market if the talks on its nuclear program fail is definitely a factor. And then also, the future of tariffs. And, some people do really expect there to be a thaw in the relationship with China, that there will be some dialing back on these. So the demand forecast is just so unclear over the next few months. We've also seen to some extent that they've been kind of waiting to move to claw back some of the market share they've lost, since particularly these massive voluntary cuts have been in place. And if you were looking for a window when there would be a good opportunity to do that in terms of prices, they haven't really had one. So it may be, to some extent, a realization that that's potentially not coming. And if there won't be a better time to do it, then why not do it now?
Well, Hamid, looking at broad across the North Africa in terms of energy development there and the potential for new supply beyond Libya, Algeria, Egypt, where is the investment outlook there? Can they attract the capital? Can they offer the deals to Egypt now? 120 million people desperate for new gas supplies, desperate for power capacity. Where's the North Africa general investment outlook?
The general investment outlook, obviously, North Africa benefited a great deal from the fact that Europe wanted to diversify away from Russian gas or Russian energy. And Algeria has been, if you like, leading in that regard, with Libya lagging behind and not taking advantage of that. But in that sense, I guess Europe remains a key driver, or the demand from Europe remains a key driver for investment from North Africa. And I think another important possible development is obviously this lack of focus, if you like, globally now due to the Trump administration's or the Trump 2.0 administration, and the whole kind of getting away a little bit from commitments to energy transition by, if you like, by energy giants such as British Petroleum, BP, and for example, BP left Libya in 2018, but now they're trying to come back as well, or have been pushing the NOC for some sort of a favorable terms for the new bid round. So I think these factors, if you like, have driven up.
Does that remain there, that sort of hunger for Europe to diversify? Is it translating into hard dollars, hard opportunities?
There are, or there has been projects. I think Libya will be interesting to watch. So there is now, if you like, the wisdom is that there will be regional NOCs that will get better opportunities, but it will be interesting to watch American companies or giants and European companies competing for the new bid round. I think that
who are the historic Americans that were in Libya before that could come back?
Chevron, ExxonMobil, Hess as well, that left also in 2018. All of these giants were active in Libya. Marathon as well was there. But it remains to be seen if they will find that the new terms put out by the Libyan National Oil Corporation, for example, whether they're favorable and whether they counter the risk that comes with doing business in Libya and its current state. But I guess for the next few months, it will be interesting to watch whether these Europeans and American giants will be able to secure or will be able to compete, if you like, in this new bid round. And that will give us an idea of the kind of investment flow flows to expect and commitment also from these giants in North Africa.
Let's go to the survey question, asking some of the themes that we've been discussing here this morning, the direction of travel for oil prices, what's going to be the biggest, have the biggest bearing on the direction of oil prices, given all of the multitude of things that are going on in the world at the moment, all being quite significant. Russia and Ukraine ceasefire seems to be very much certainly in the talk. Whether it's something that will get there in the end, it's not a minor hurdle, i.e. Ukraine give up all of your sovereign territory for nothing. It seems like a big ask for Europe and Ukraine, but nonetheless, that's what Donald Trump and his good friend, Mr. Putin, seem to want. Iran-US nuclear agreement, could that be secured within a very tight window? All of these things kind of seem to be on some sort of express train deadlines, and these are all major, they take years to resolve, but ultimately Iran-US nuclear agreement talks are in a kind of a 6-8 week framework of deadline, at least as set by the Trump administration. China-US trade pact. It does seem like China is basically letting Washington negotiate with itself on that and just getting on with life. OPEC plus oil supply plans. Which of these four will have the greater bearing on direction of oil price? Inevitably, all of them will, but ultimately, which do you think is the greatest bearing for what's the oil markets looking at most closely for direction as we kind of get stuck in this mid-60s, $10 below where we were stuck previously? The Barnacles found a new rock. It's kind of $65 on Brent. What will shift it? Bill, I wanted to call on your deep Asian expertise. I spent many years as the Wall Street Journal bureau chief in India, Japan, and elsewhere. Looking at the world from their perspective, their willingness to concede to the US, to Trump's tariffs. We saw the first Japanese, the first sort of ones in the meeting, they kind of walked away with like, were we speaking Japanese there? Because we don't know what he wants. I mean, where do you think the Asians are going? Let's deal with Japan first and then maybe India.
Yeah, I think, the US, traditional US allies like South Korea, like Japan, they're going to immediately work on some sort of a deal in the short term, try to offer up a lot of things they're already got in the works, things they plan to do anyway, maybe add a little bit to it, and see if they can get to some shorter term deal. Longer term, I think they really do have some uncertainty. They have to think through about the long-term reliability of the US in the rock solid relationships they've had in the past. India is, I think, an interesting case because I think there is one of the cases where you really could see an interesting shakeup of some of their trade policy, which has been really restrictive and is very difficult to break within the domestic context there. And if this could break through some of that and you could get a sort of rethink of India's, what has been a very restrictive trade policy, and loosen that up, you might see some real benefits for India and a significant change. And India didn't have that sort of really deep.
When you say real benefits, you mean in the context of their US trade relationship?
Both within the context, but I think generally for their economy, they'd be better off if they had lower tariff rates in India, and you kind of forced companies there to start competing on a global basis. Because
they've always historically had a very protectionist approach that they've sort of
removed that, internally. So an outside shock could potentially benefit, I think, India's economy.
It kind of gives Modi some political cover to be a little heavy-handed.
Yeah, there's no question there's a need for more competitive domestic environment, which would in turn, make India a much stronger economy on a global scale going forward. And this, in a silver lining sort of way.
Yeah, no, that's an interesting that maybe that makes maybe India buy in some regards, that there are silver linings to these things. The other silver lining, perhaps, Rosemary, is in Europe, some kind of sense of European solidarity on looking forward. What does that look like vis-a-vis energy strategy, the position vis-a-vis Ukraine, Russia? Would Europe continue to support or Ukraine, or the opposite? Will they give up Ukraine so they can get Russian energy back? Where is that debate at the moment?
So I think we're seeing a big contrast in the news coming out of Europe. There's been an IEA and UK government organised energy security conference in London this week, and the UK and Europe were definitely kind of in an opposing camp to US and also previous statements from OPEC. So the UK and Europe are really saying that the route to energy security is to ramp up homegrown clean energy. And we're expecting in the next 2 weeks that there will be a roadmap to completely phase out Russian fossil fuels in the EU by 2027. So
even Russian LNG, which has continued to flow over the last few years, may also be removed.
The target is a full phase out.
Wow.
Yeah. So
regardless of where ceasefires go, I mean, that seems
to be what they're saying at the moment. I mean, how much that plays into ongoing support for Ukraine, which obviously is a broader political issue beyond energy within Europe. The war obviously feels a lot closer here than it does in the US. The Ukrainian energy minister was also taking part in the conference this week. And one of the things that I found very interesting about what he said was that we've seen so many attacks on Ukraine's power network since the war started. That really is a big part of Russia's strategy, is to kind of trigger wide-scale blackouts in Ukraine. But one of the things he was saying was that accompanying that, there has been, a week before these massive military attacks, there's been cyber attacks. And cyber attacks can sometimes go to the background because explosions are impressive, and obviously in a very negative way. And here at Platts, we've tracked over 100 incidents of cyber attacks since the start of 2017, and around a quarter of those have been in 2024 and 2025, respectively. So that's definitely a big rising issue of concern.
Mohammed, last word to you with the survey result that OPEC still seems to be the only game in town for the oil markets, and US-China trade pact less interested in the politics of everything else, it seems. But Mohammed, I wanted to get your thoughts, if indeed you have an ability to give us some insights, because I'm quite keen and interested to keep an eye on how North Africa acts in this trade tariff war. There's a possible re-export center for China out of Morocco, out of Algeria. Where does North Africa land in all of this sort of changing trade dynamics? You're on mute, Mohammed. Sorry.
I think it will be interesting. I wrote an article specifically about Libya, but it could apply to North Africa overall in terms of what Trump 2.0 would mean, for example, for North Africa. And I think energy could potentially, there has been lots of events happening either in Houston, in Washington, for example, as far as Libya is concerned, where it looks like the Trump administration is interested in shoring up the interest of American energy companies to basically explore opportunities in a place like Libya. And energy is one of the top areas that I think there will be greater engagement there. But again, I guess for the next few months will give us an indication of that, and whether there would be number one, an interest from, for example, American companies that would drive their investment and engagement in North Africa, in Libya in particular. But number two, it's whether they will be able to secure and compete with other newcomers and actors in the region, specifically from the UAE, from Egypt, and from Turkey, also, that are showing greater interest there.
Interesting. Well, we're going to have to wrap it up there. We've got, as we started out, there's interesting discussions or certain noise across the global headlines about where Morocco could play a role in this new trade war, and particularly the sort of historic roles of a place like Tangiers and elsewhere. So interesting to keep an eye on. But where Brent crude oil is this morning is essentially little change. There's a little bit of upward momentum on Brent crude oil at 66.84. It's doubled. It's from whatever 15 cents to 30 cents up. Maybe all of our bladder had an impact there, but we can sometimes think about that. But nonetheless, Brent crude oil ending the week down, and with this continued uncertainty as we go into the first 100 days of Trump on April 30th. Early next week. Will that see the end of the tumultuous Trump turmoil that we have witnessed, or are we still in the foothills of more to come? We will wait and see. But thank you so much to Bill Spindle in the US, Mohammed Eljar in Libya, and Rosemary Griffin in London. Thank you for your time this morning. Have a great weekend, everybody. All the best.